is because the exchange ratio was based on the EPS, hence it is a non-dilutive. That one I have given it the best of the explanation, and I'm trying to move slowly so that you understand. For questions, I will always move very fast. Let's go to question number 2. The EPS after the merger under each of the two alternatives. Oh, we are on this alternative. That is alternative 1. We'll move to alternative 2. Yeah, let's move to alternative 2. Alternative 2. For this one, we are saying, as per the question, it reads, half of a share of X for 1 share of Y limited. Half of a share of X for 1 share of Y limited. So I will take it that way. Then I'll come down here and I'll say that exchange ratio is equal to half 1/2 is to 1, and this is equal to 0.5 to 1. That is the exchange ratio. So if the exchange ratio is half to 1, how is the reaction? And I just want to go by what we've done here. I just want to, the number of shares will not change. We need to determine number of shares, the combined earnings, or let me just do it separately without bothering. So I'll say combined earnings. This one remain at 16. We said 16.5. 16.5 or something. Yeah, it was 16.5. Then we have number of shares to predator shareholders. Number of shares to predator shareholders is equal to 3 million. Then we have number of shares to target shareholders. Shareholders is equal to exchange ratio 0.5 we multiply by 2 million, which is equal to 1 million, like that. So can we therefore determine the post acquisition exchange ratio is equal to 16,500 divided by, okay, let me bring it down here. So divide by the number of shares, 3 million, plus 1 million, like that. So can someone give me this, please? Let me have this post-acquisition. Oh, not post-acquisition exchange ratio. Where did I get this? Post-acquisition EPS. Post-acquisition earnings per share. Yes, please, please, please. Give me this. Give me this. Let me see how much it is. 4.125. Someone says that. Can we confirm? Four point one two five. 4.125. Good, thank you. 4.125. Good. Now, I want us to do an analysis. I want us to do an analysis here. We say that post acquisition EPS to target shareholders is equal to the 4.125. Then post acquisition EPS to the, oh, no. How can I make a mistake like this? To the predator. So here we say to the target shareholders is equal to exchange ratio of 0.5. We multiply by 4.125. How much is 0.5 times 4.125? 0.5 times 4.125, please. How much? 2.0625. 2.0625. 2.0625. Now, I want us now to have a summary so that I can explain. I can explain. Summary. We have X predator. X is the predator and Y is the target. So we have the EPS before merger. EPS before merger. This was 4. This one was 2. Was it 2.25? I think. Then post acquisition or post merger EPS. This one becomes 4.125, while the other one becomes 2.0625. Now, when you look at that, this is what you are concerned about, the dilution of the EPS. The dilution of the EPS. The predator EPS increases. The predator EPS increases after the merger, but the target EPS decreases after the merger. Therefore, the target EPS is diluted. So they have lost. If they are going to get into this deal, they will have lost. And that is what we need to look at. I don't know whether someone has a question. I think I've tried to explain, because these are some of the things that you get in the real world, in the real life, where you need to make critical decisions about companies. And I have put it very clear for non-dilutive and the dilutive perspective. So let us move on to the next item, which I equally want to explain. There is something we call the synergetic gain. Synergetic gain in merger and acquisition. We must have mentioned that 1 plus 1 in a synergetic gain is equal to 3. 2 plus 2 is equal to 5. There is that gain. When you bring two companies together, there are likelihood that some benefit will accrue. So we say, in some cases, the shareholders may enjoy some synergetic benefit or gain for combining the firms in merger and acquisition. This leads to increase in EPS for both the predator and the target shareholder. In case of synergetic gain, the maximum amount payable by the predator to acquire a target is the total post-acquisition value less the predator's value before the acquisition, while the minimum acceptable by the target is an amount equivalent to its value before the acquisition. Before I explain that, I want to give you a 5 minutes commercial break. 5 minutes, 5 minutes, 5 minutes break so that I can explain this. So let us take 5 minutes break. You take water, I take water as well. Welcome back, so that we can continue. Let me know whether you are there. We continue. Let me know whether you are there. Yes, let me know. Are you in class? We continue together. Are you in class, so that we can move together? Yes. Okay. I want us to finish with an explanation of the synergetic gain, that is the value that come with the combination. Remember, in our earlier question, the one we did from the exam, we looked at a scenario where we are determining the value of a farm, to be acquired, and we looked at different ways. But I want to give it a different perspective, because we need to be dynamic. We need to be very dynamic in this life, whether it is for exam or for our life. I want to explain how do you determine the value of the target in case there is synergetic gain. So let me read. There is this part I explained here, and I say that in case of synergetic gain, the maximum amount payable by the predator to acquire target is the total post-acquisition value less the predator value before the acquisition. While the minimum acceptable by the target is the amount equivalent to its value before the acquisition. I can explain this one using an illustration, a very small illustration, so that we understand. I will explain one illustration, then I will give you another one as an assignment. You go discuss, then we will look at it possibly next time. But what I want you to do is look at this very short illustration, but it has a very big meaning. We are told that Texas Limited is considering making a bid for acquisition of entire equity capital of Vexus Limited. Vexus Limited has a price earnings ratio of 9 times and a total earnings of Rwandan francs 390 million. Texas Limited has a price earnings ratio of 13 and earnings of Rwandan francs 693 million. It is expected that 1.25 of the synergetic gain, 1.25 million of synergetic saving will be made as a consequence of the takeover. The price earnings ratio of the combined company is expected to be 12 times. So the question is required. Determine the maximum value that is acceptable to Vexus Limited shareholder. Number 2, determine the maximum amount that Texas Limited should consider paying. I want you to take 2 minutes. You read through this illustration. Read through this illustration, please. Just read through it so that we can look at it together. Read. Someone says check the voice. I don't know whether you are referring to mine or it is someone else. I hope I'm visible. I'm audible. Please confirm whether you can hear me. As you read, please let me know whether I'm audible. Does it mean I'm not audible? Please, can you confirm, because I haven't changed anything. Someone says that my side, someone says that we can hear, someone says that the mic is not clearly audible. The problem is still there. Your microphone does not sound good. What? Okay. Let me mute, then unmute. Now, can you confirm whether I'm now clear? Am I clear? Please. Some says yes, some says okay. So I believe, okay, thank you. If it is okay, then we can proceed. Read through that illustration so that we look at it. We are about to wind up. I want us to wind up using that one. I want us to wind up using this question. And in the meantime, I can read through it again. Texas Limited is considering making a bid for acquisition of the entire equity capital of Vexas Limited. Vexas has a price earnings ratio of 9 and a total earnings of 390 million. Then we say that Texas Limited has a price earnings ratio of 13 and total earnings of 693 million. It is expected that 125 million of synergetic savings will be made as a consequence of takeover. The price earnings ratio of the combined company is expected to be 12. I want to just use this question to demonstrate that part, and that will be enough for today. We must have done so much. So let me start with the minimum value acceptable. Okay, the first thing is the data summary. Our data summary, Texas is Texas Limited is considering making a bid. Texas is the predator. Vexas is the target. Vexas is the target. So what information do we have? The two farms, we have one called Texas, and we have the other one called Vexas. Now, if we went back to the question, we got a few things that we are told here. Texas Limited is considering the entire equity. Vexas Limited has a price earnings ratio of 9. So we need to do the price earnings ratio. price earnings ratio. This one is 9 times. And the other one is 13 times. 13 times. We are also told that and a total earnings of 390 million. So Vexas has a total earnings of 390. Texas has 693 earnings. This is, I think, 693 million. This one is 390 million. 390 million, like that. Then we are told that it is expected that 125 will be gained as a synergetic. It's a synergetic gain or a synergetic saving will be achieved as a consequence of merger and acquisition. The price earnings ratio of the combined company is expected to be 12. So price earnings ratio after merger is equal to 12 times. 12 times. Now, if this is the case, we are required, the first question, minimum value acceptable to Vexas. The minimum that Vexas, the minimum that the target can accept. Because as a target you are supposed to be consider to ask yourself, at what point can we go below? To what extent can we go down the minimum amount? And this is the point that I explained here. If you look at this point, in case of synergetic gain, the maximum amount payable by the predator to acquire the target is the total post-acquisition value less the predator's value before the acquisition. While the minimum acceptable by the target is the amount equivalent to its value before the acquisition. So what is the value of the target before the acquisition? The minimum that the target can accept should be its value before acquisition. So what is the value of the target? Value of the target. And this is the Vexas. Value of the target, the value of the Vexas. Value of the target. So we have the price earnings ratio, it is equal to, we have the price earnings ratio, and we have the earnings. So we can say that price earnings ratio is equal to market price over earnings. So if you want to get the value or the market value, it is equal to the price earnings ratio we multiply by the earnings. And this is equal to, we are dealing with the target, the Vexas, 13 times, you multiply by 390. So how much is that? How much is 13 times? 13 times. You multiply by 90, by 390. Someone to post. Someone says 501. Is it 509? Please, can we confirm that? 5070. A price earnings ratio of Texas is 13, not 9. No, but we are determining the one for Vexas. Value of target, Vexas. Oh, this is Vexas. From the question, how much was the, let me confirm. Texas Limited has a price earnings ratio of 13. Texas has a price earnings ratio. Oh, this one is the 13 and this other one is the 9. Thank you for that. Thank you for noting that. So this one should have been 9. Okay. Okay. Let's confirm. So how much is the amount? Correct that one. It's 9. Someone to give me that 510 million. That 510 million. That's what I see from the majority million. That 510 million. So the minimum that the tech target can accept should be its value before the acquisition, and that is 3510. You cannot sell your entity below its value. The other question is the maximum amount Texas Limited should consider paying. The amount payable. Now let's look at this. Let's look at this point. In case of synergetic gain, the maximum amount payable by a predator to acquire a target is the total post-acquisition value, the total after acquisition value less the predator value before the acquisition. It is note total post-acquisition value less the predator value. That is the maximum that this entity can pay. So we say that maximum amount payable by the predator is equal to post acquisition value minus the target, the predator pre-acquisition value. Now I want us to determine post-acquisition value. Post-acquisition value is equal to total earnings multiplied by post-acquisition price earnings ratio. So how much is this? Total earnings, I can say that total earnings is equal to, how much is the total earnings? If we went back to the question, it is the earnings of the target, predator, and the synergetic gain. So it is 390 plus 693 plus 125 synergetic gain. Look at it. Texas Limited is considering, we are told that the Vexas Limited has a price earnings ratio of 9 and a total earnings of 390. Texas Limited has a price earnings ratio of 13 and total earnings of 693. It is expected that 125 of synergetic saving will be made as a consequence of the takeover. So it is 396.93 is equal to 390 plus 693 plus 125. How much is that? How much is that? Sum them up. Is it 1510? 1208. 1208 million. That's what I see. So, million. 1208 million. Now, post-acquisition value is that. Now, can you determine maximum amount payable? The predator pre-acquisition value. No, this is earnings. So if we have the earnings, can we therefore determine the post-acquisition value? Post-acquisition value. It is equal to 1208 million. You multiply by, are we told 12 times? Yeah, 12 times. How much is this, please? Someone say 14,496. Can we confirm? Is it 14,496 or 14,4496? 14,496. Let me assume that is the correct one. 14,496 million. 14,496 million. That is post acquisition. Then the predator value before merger is equal to price earnings ratio multiplied by the earnings. Which is equal to the price earnings ratio for the predator was how much? 13 times. Multiply by 693. So 13 times. How much is it? 9009 million. 9009 million. 9009 million. Or someone is asking, where is 125? It is here in the question, this part. Here, we are told that it is expected that 125 million of synergetic saving will be made as a consequence of the takeover. I think that is what you're asking. Where is the 125? So that is it. 9009. So we are saying that the maximum amount payable by creditor is equal to 14,496 million minus 9,009 million. And this is equal to how much? $54.87. Is that correct? Someone is giving me $54.87. Please confirm. $54.87 million, yes. So this is 54.87 million. So what are we saying? The predator will be willing to pay a maximum of this. The target will be willing to accept a minimum of, how much was it? A minimum of this. So that tells you that there is a room to bargain. The predator can pay a maximum of 50, is it 54.87? Is that what I saw? Yeah, 54.87. The predator can pay up to 54.87. The target can accept up to downward to 50, a minimum of 55.10. So they can negotiate in between and none of them will be at loss. That is what we call the issue to do with synergetic gain. Now, I want you to look at this other question. This other illustration, I want you to read through it. I read. Huge Limited is contemplating a complete share acquisition of Tiny Limited. Huge Limited is offering 3 of its shares for every 2 shares of Tiny Limited. The data relating to the 2 companies are shown below. Huge Limited, Tiny Limited. Earnings to ordinary shareholders for each, earnings per share, market price per share, that is the MPS, the corporate tax rate is 30%. Required, number 1, determine the maximum offer price that will not dilute, non-dilutive, that will not dilute EPS of Huge. 2, compute the premium payable to the shareholders of Tiny Limited. 3. Given that the growth rate of Huge Limited is 8%, while that of Tiny Limited is 12%, compute the combined growth rate of the two firms. Okay, read through that question. Read through that question. Okay, now um, with what we've so far done, I would want to test your understanding before I look at this question. I would want to test your understanding of this topic by giving you this as an assignment. So I'll give this one as an assignment. Assignment. This is what I expect you to do. Try to discuss with your friend, try to discuss with your colleague. I want to give you the assignment for a whole 1 week. Once you do it, you can send it to me. I see what you did on WhatsApp. Then from there, I think I will comfortably say that we are done with this topic. We'll see what will come next. But as it is for now, I just want to leave it at that. At least people can rest. But I'm sharing this one with the admin, the administrator or the programs coordinator. I know they will share with you. I can share with a few numbers that I have with me. Maybe I may not share in all of them, but at least I will share with the ones that I have. Yeah. So let me ask, is there a question? Is there a question? Is there something that you need clarified before we call it off? I'm checking whether there are questions. I'm checking whether there are questions. Someone is asking, is there any way you can compute post-acquisition post-acquisition price earnings ratio? Yes, yes. The formula for price earnings ratio is the market price per share of our earnings per share. So in case you are given any information that will lead you to the market price per share after the acquisition and the combined earnings, then you can determine the post-acquisition EP, the post-acquisition price earnings ratio. So it is possible depending on the information that we have. Good. Someone says you don't have my number. Yes, I'm very sure you don't. But there are some who have. I don't know where they got it from. I don't know where they got it from. I want you to give us the hint when we are doing the question about merger and acquisition. That is why I'm giving you that question as an assignment. Go try it, try to discuss it so that when I will be looking at it, I'll give you now the other information. Oh, someone says that you got it from my notes. Yes, I believe on my notes they are there. So make sure that you get my notes. You will always have my contact on those notes. Good. I will share with a few people. I have your numbers. Then please, if I don't share with you and I have your number, bear with me. I could be having so many numbers that I may not be in a position to. But once I share with you, share with others. That is how we help one another. I'm sharing. Okay, we can leave it at that. Good evening, good night. Say hi to your families. Yeah. So you can leave. You can leave at your own pressure. I am sharing with a few that I have their contacts. Yeah, the one that I have their contacts. Once you receive, share with others, and we can leave. I think the class is over. The class is over. I'm sharing. Okay, once you receive, please share with the others. I have shared with quite a number.